Welcome, ladies and gentlemen. Vito Lanuti here on Tap Instructional Videos. Today we're going to talk about the transfers and additional property features of the program. So here you can see our list, and under transfers we're going to be moving funds from an existing account to a new cash account. We're going to close an existing cash account and transfer the funds to a new cash account. We're going to transfer funds between existing accounts, done just a little bit differently. And then we're going to purchase a new asset with funds from an existing cash account. Under additional property, that's going to be the receipt of some sort of property that increases the value of the estate from a gift or inheritance. So it's not a receipt like rents would be. Okay, so uncle passes away and leaves a piece of property that comes into this particular trust, or Aunt Jane makes a gift of cash or property. And when we receive a gift or inheritance of cash, we're going to distinguish between deposited into a new cash account or a gift into an existing cash account. The amount of money is the same. How we report that in the software is a little bit different. Moving into the program now, we're going to open up the James Jones Trust. I've put in some preliminary data in here. This is in our standard module, and you look here on our dashboard down the left-hand side, a bunch of our drop-down menus, including the transfer and additional property. Here we are talking about new accounts, new CDs, all of our different asset classes. So our beginning inventory, by comparison, has the same asset classes, but these are assets that exist on the beginning date. Okay, so let's just take a quick look at what we have. We have 3 cash accounts. Listed here. And when we go to our receipts and disbursements, here is our drop-down menu of our 3 accounts and the balances that we have. Okay, so what we're going to do, look at our account. We have $25,000 in B of A, we have $50,000 in California Bank, and $250,000 in the cash portion of Morgan Stanley. Then we go back to our beginning inventory. We have that listed, Morgan Stanley, in the cash portion of the stock account, because we can write checks on that account. So we want to be able to report that the way we would report a bank account. All right, now what we're going to do is we're going to create a new bank account. Okay, and we're going to transfer money. So we're in the transfer section of the discussion. Okay, so we're going to transfer from California Bank, okay, into a new bank account, Wells Fargo. Okay, and so what we're going to do is we're going to write a check on California Bank and take it over to Wells Fargo, $10,000. Okay, so first thing, we enter that, we have that information under our new cash accounts, and we go back into receipts and disbursements, and we see here we have our newly created bank account under Wells Fargo. So we took $10,000 out of California Bank, so we have to open up California Bank, and we still have our original $50,000 balance here, so we have to deduct and move $10,000 out of there. We're going to select Transfer Out, and our automatic fill is operating well there, $10,000. transfer to Wells Fargo. I must confess, I did play around and with this earlier, and that's why we already have our autofill working like it is. And we're going to go transfer funds out. Transfer funds out is neither a receipt or an expense. It's just movement from one portion of the trust to another. Select save, and there we go. Now we have $40,000 in California Bank and our $10,000 in Wells Fargo. So what we did in review is under transfer and additional property, we have created the new account with the $10,000 balance and then transferred funds into the new account from an existing account. The next thing that we're going to demonstrate is creating a new account and transferring all of the funds out of an existing account into the new account and then closing that account. So we're already in new cash accounts and transfers and additional property. So we're going to open this up. We're still going to do a transfer. So what we're going to do, we're going to transfer from California Bank to Union Bank the sum of $40,000. So practically speaking, we write a check for $40,000 and we march into Union Bank and we open an account. Okay, so on our software, we look here, we now go to our drop-down menu and we see that we have our Union Bank and we have our new balance of $40,000. And here we have our $40,000 and our transfer funds out. Let me just show you this transaction. I did it earlier, but now we have our $40,000 and we have to do a new transfer out of the $40,000 to Union Bank. So we put that $40,000 in here as a disbursement. Transfer to Union Bank. We have transfer funds out selected and we select that. And we have a zero balance now in California Bank. One last step to close this account off in the software. You can do it now or you could do it later, and that is to go to the ending inventory, and you'll see we have our listing here of California Bank with a zero balance, and to take that off of the list of bank accounts that will appear in the ending inventory or also be imported into the next period, you simply uncheck California Bank. And as I said, you can do that now when you actually close the account, or you could do it later when you are doing some reconciliation in the ending inventory and you want to take it out at that time. All right, so that's how we open an account, a new cash account, and go ahead and close an existing account. We have two more transfers to demonstrate to you. The next one is going to be transferring funds between existing accounts. And it's so related to what we're talking about here. We're going to cover that now. So we don't use the transfers and additional property drop-down menus for this particular transaction. All we need to do is go into our bank accounts, okay, and select the bank account from our drop-down menu that we're going to move money from. So what we're going to do is we're going to move $20,000 from Morgan Stanley and put that into our Wells Fargo bank account. So once again, we have a transfer out, $20,000. Okay, and this is going to be transferred to Wells Fargo. And we need to select from our drop-down categories, transfer funds out, and we hit save, and there we have reduced the balance to $230,000. The second leg of the transaction is to add that transaction into Wells Fargo. We make the deposit, $20,000. Okay, this is from Morgan Stanley. And then when we get to our deposits categories, this is going to be transfer funds in. Select save, and we're done. So now we have $30,000 in Wells Fargo and $20,000 less, $230,000 in Morgan Stanley. The final transactions that I want to demonstrate to you under the heading of transfers may not seem at first look like it is a transfer. But what we're going to do is purchase new property and use existing funds. So when you use existing funds, you are moving property within the trust and estate. So we're going to go to transfers, additional property, and we're going to buy some stock. Okay, so we go in here. Let's buy. First of all, this is going to be a transfer, so we select the transfer radio button. We buy some Microsoft stock, 100 shares. Right today, Microsoft is trading at roughly $105 and some change. We'll stay with some even numbers here, and you'll see 10,500 was the purchase. Very handy to let the computer calculate that sum for you. And what we're going to do now is we're going to move from the Morgan Stanley account into the purchase of Microsoft. So we're moving 10,500, and we purchased 10,500. So we're going to transfer out of this account 10,500. We've got that, and this is a Microsoft purchase. $100 shares, and we're transferring funds out. We reduce our balance accordingly, and there you go. So let's take a quick look at the ending inventory, and you will see here appears our Microsoft stock. So that's a new acquisition. That's new property, and we look at our account summary, and it still balances $325,000 and $325,000. We just moved assets about, and we have a non-cash here, a non-cash asset of 10,500, and that's our 100 shares of Microsoft. One thing I do want you to notice: nothing appears in additional property received, because this, for purposes of our software, is a transfer between the Morgan Stanley account and the purchase and the Microsoft stock. So now we're going to move into additional property, and it's going to be helpful to understand what we mean by additional property received. You can see our line item here under charges, additional property received, and this is going to be property that is not moved from one portion of the trust or estate to another portion of the trust or estate. We demonstrated that very clearly as a transfer earlier in our earlier discussion. So now this is going to be a gift or inheritance made into this trust or estate from another trust or another estate. So how do we report that? We can receive a gift of cash. We can receive a gift of property. So let's look at the situation. The one thing that we want to make sure happens is that if it's a gift from outside of the trust or estate, that it is going to find its way into the line item additional property received in account summary. So one, we can receive a gift of cash into an existing account. So if we are going to receive a gift of cash into a new account, we would go into new cash accounts and we would select additional property and then name the new bank account. But we're going to receive a check for $5,000 from the estate, and we're going to deposit that into one of our existing accounts. So we don't need to create a new account. And so we're looking down into our asset classes, and we don't have any other asset class for cash accounts. So we're going to select our catch-all situation, input screen, other assets, and we're going to input here gift from Uncle Sam. That'll be the day, $5,000. All right, we saved that. And what we have now is we go to our account summary, and you'll see by listing it there in other assets, we do get the $5,000 here in additional property received. Okay, and we have this $330,000 and $330,000. However, that is a check, and we look at our ending inventory, and we take this check now for the 100% gift from Uncle Sam, and we uncheck it because we're going to deposit that, or we have deposited that into an account. And we look at our account summary again, and you'll see it does not balance because we have 330 here and 325. We took that 5,000 out of the calculation when we unchecked in the ending inventory. And what we need to do is show the deposit in one of our bank accounts, whichever one the trustee decides they're going to use. We'll use the Wells Fargo. We have it up, and we'll say deposit 5,000, Uncle Sam gift, and that's going to be a transfer funds in. Okay, and there we have 35,000, and we return to the account summary. We're back to having the account summary balance. Okay, so just to repeat one thing, we're using the transfer funds in rather than a receipt because we have already reported that under new other assets. So that one, the new other assets, establishes the 5,000 is owned by the trust, and now we're just moving it from this category into the bank account. Now suppose that we received another gift from Aunt Alice, and we're going to open a new bank account and use that 5,000 to open that bank account. In that case, we're going to go into new bank accounts, new cash accounts. We're going to select additional property, and we're going to name our new bank. And deposit another $5,000, and there we have it. And when we go to receipts and disbursements, you'll see here's our new bank account, and there's our $5,000 balance. When we look at the ending inventory, we have our Main Street Bank here with our 5,000 current value. So all of that flows through. Our additional property received has increased to $10,000. Okay, and we balance a 335 on credits and charges. Okay, last thing is we're going to receive a gift of real estate. In that case, we go to transfers and additional property, select add, and we're going to have additional property, and we're going to call this raw land worth $10,000. Okay, and we receive that. Once again, we look at the ending inventory, and there's our raw land, and we look at our account summary. Again, our $10,000 added to our previous 10 is shown up in additional property received, and we balance on both ends, and you can see the increase by 10,000 in non-cash assets. All right, so there we go. That's it for transfers and additional property. Lots of things to understand in this section of the program. I hope that this video helps, and I hope that you have a great day.